Okay, so Nike.
Yeah.
Everybody knows Nike, right? That swoosh,
Huge brand.
huge brand.
Global.
Yeah, global. Absolutely. And right now, their stock price is,
Kind of in the dumps a little bit.
yeah, it's sitting near a 7-year low.
Wow, 7 years.
As of yesterday, March 25th, 2025, it was around 66.61.
Okay.
That's a level we haven't consistently seen since like the early days of the pandemic back in 2020 when it briefly dipped below 63.
Yeah, I remember that.
So the question is, and I know you're thinking about this too with Nike, at this price point, is it a screaming buy?
Yeah. Is it a buying opportunity? That's what we want to figure out.
That's what we're tackling in this deep dive today.
I love it.
Now, you flagged this really interesting article from the Motley Fool.
Yeah, they always have great stuff over there.
They do. And, they're not just looking at the fact that the stock is sold off, but they really get into like the why behind it.
The why?
Yeah.
It's really important.
Yeah. And more importantly, they explore whether the issues are like temporary or if this is a fundamental problem with Nike.
Right, exactly.
And if there's a compelling case for optimism despite what's going on right now.
Right, because they do have some headwinds for sure.
So I was going to pull out the key pieces from this article to help you make sense of it all.
I love it.
So the Motley Fool article, it's a comprehensive view. They talk about their recent sales performance, what's happening with their profitability, the margins, what are their plans are for the future to kind of reignite the growth.
Yeah, back on track.
Yeah, and how is the market currently valuing the company?
Yeah, what's Wall Street think?
So let's start with the big picture. What are the main factors that have contributed to this huge drop in Nike's stock price?
Yeah, so the article points to this pretty significant strategic change that Nike made back in 2017.
Okay.
And that was the move toward direct-to-consumer, or, as we all know it, DTC.
Yeah, that's a buzzword these days.
Yeah, you hear it everywhere.
So what was the thinking behind that?
Well, the initial thinking was actually pretty logical. By selling directly to consumers, you cut out the middleman right. So Nike could build these stronger relationships with their customers. They could gather more feedback on what people actually want.
Right.
And then tailor their promotions to be more effective.
Yeah, so like on paper, that sounds really smart, right? Like cut out the middleman, get closer to your customer.
For sure.
So where did this strategy stumble? Where did things go wrong?
Well, it's interesting because the DTC approach did see some real success, especially during the pandemic.
Okay.
When everybody was shopping online.
Yeah, nobody was going to the stores.
Exactly. So it seems like a brilliant move at the time.
Right.
But it seems to have created some unintended consequences.
Okay.
The Motley Fool piece really highlights this strain in Nike's relationships with their traditional wholesale partners.
So like the Foot Lockers of the world?
Exactly, like the retailers that have historically provided them with massive distribution and reach.
Right.
So by prioritizing their own channels, Nike arguably weakened these established networks.
Okay, I see what you're saying.
It's like, why would Foot Locker want to push Nike products as hard if Nike is also selling directly to the consumer?
Right, it's competition.
Exactly. There's less incentive for those retailers to really go all out for Nike.
That's a really good point because you can't just like totally shift your business model without impacting those long-standing partnerships.
It's a balancing act for sure.
And it's not like people are only buying Nike sneakers now, right? Like the landscape has become way more crowded.
Oh, absolutely.
So there's way more competition.
There's far more brands out there.
Who are some of the other players now?
Well, the article specifically calls out Decker's Outdoor.
Okay.
They make those Hoka shoes, which are super popular.
Yeah, I've seen those.
Yeah. And then there's On Holding, another big player. And these brands have really tapped into like specific consumer needs.
Okay.
And they've gained some serious traction.
Yeah.
They're offering these compelling alternatives. And that puts pressure on Nike to really maintain its market share. I mean, consumers just have so many more options now vying for their attention and their dollars.
Right. So it's not just a Nike world anymore.
Not at all.
Okay. So we've got these strained relationships with their existing sales channels and all these newer brands kind of like,
Nipping at their heels.
Yeah, nipping at their heels, coming in. And then on top of that, the article points out this issue of what they have sitting in warehouses.
Inventory.
That's it.
Yeah, it's a big deal.
So talk about that a little bit.
Okay, so managing inventory for any company that sells physical products is tricky.
Yeah.
Because if you don't have enough stock, you miss out on sales.
Right, you lose sales.
But if you have too much, which the article suggests Nike is dealing with right now,
Okay.
you have to discount stuff to move it.
Right, you gotta get another warehouse.
Exactly. And that discounting hurts your ability to sell at full price.
It impacts your pricing power, as they say.
Exactly. And of course, that puts pressure on profit margins.
Right.
You're making less money.
Yeah. In the Motley Fool, they mentioned a Y charts graph, and it shows that Nike's revenue has actually been trending downwards over the past year.
Yeah. Good.
Which really highlights those inventory problems that they've been having.
It's a real issue.
And it makes sense because if you're constantly discounting, not only does it hurt your profits right now,
Yeah.
but it can also train consumers to expect those lower prices.
Yeah.
And then in the future, it's going to be hard to get people to pay full price again.
You're conditioning them to expect a deal.
Right.
And that hurts in the long run.
Okay, so we've looked at all the reasons why the stock has sold off.
Yeah, the bad news.
What's Nike doing to fix this?
Yeah, what's the game plan?
What's their plan according to the article?
Well, the article outlines a multifaceted approach, which I always like to see.
Multifaceted, I like it.
So a core element is focusing on product innovation.
Okay.
So, creating those exciting products that people really got to have.
Yeah, you got to have the Jordans, right?
Got to have the Jordans. You got to have the new thing.
Yeah.
That generates that buzz and that demand.
Okay.
And they're also focusing on improving their supply chain management.
Okay.
So this is key.
Yeah.
They want to prevent those inventory imbalances that
Right.
we just talked about.
Too much stuff in the warehouse.
Too much stuff, exactly.
Okay.
And then crucially, they're aiming for a better integration between their digital sales efforts
Okay.
and the relationships with their wholesale partners.
Okay, so they're trying to make it all work together.
Exactly. Find a balance where both those channels can thrive.
And the article mentioned this win now strategy.
Oh, no! I love it.
What's the gist of that plan?
So it's really all about getting back to Nike's roots in athletic wear,
Okay.
especially footwear.
Shoes.
They're doubling down on shoes,
Okay.
and they're making targeted investments in key cities that they think are these influential growth markets.
Okay, which cities are we talking?
We're talking Shanghai, Beijing,
Yeah.
London, Los Angeles, New York.
Okay, so like the big global cities.
Huge metropolitan areas.
Yeah.
And the idea is that success in these cities will kind of create this halo effect.
Okay.
And it'll drive demand everywhere else.
Okay.
Because those cities set the trends right.
They're trendsetters.
Exactly.
And it sounds like they're making a big bet on China in particular.
Huge bet on China.
Okay.
That's a key takeaway from the article. And Nike seems really optimistic about their prospects there.
Okay.
They're talking about how strong their brand recognition is in China
Okay.
and how they think these new products are really going to resonate with the Chinese consumer.
So a lot of potential there.
A ton of potential.
Okay.
But here's the interesting thing.
Okay.
Despite all this optimism, their stock has still gone down.
So what does that tell us?
It tells us that investors are still a little bit cautious.
Okay.
They want to see results.
They don't just want to hear talk. They want to see action.
Exactly. Show me the money.
Right. And the article points out that Nike's own guidance for the near term actually points to lower sales next year.
Yeah, it's a little bit of disconnect.
Yeah. Yeah. So they're saying we're really optimistic about the future, but our immediate outlook is not so great.
Yeah, which can make investors a little bit nervous.
So they're expressing confidence in their future in China, but their immediate outlook doesn't inspire the same level of confidence.
A little bit of a tension there.
Yeah, that creates a real problem for investors, right?
Yeah, I mean, which is it? Are things good or things bad?
Right.
But the article actually gives us a little bit more context here.
Okay.
They quote Nike's CFO, Matthew Friend, and this was from their Q3 fiscal year 2025 earnings call.
Okay.
And he basically said that the fourth quarter of this year is probably going to see the most significant impact from these win now initiatives.
Okay.
And that the headwinds on revenue and gross margin are expected to start easing up after that.
So things will get better after that.
Hopefully.
Fingers crossed.
But he also talked about a number of external uncertainties that could impact their progress.
Right.
So, like, what kind of external factors are we talking about here? Well, he specifically mentioned things like geopolitical instability. So, like, wars and conflicts around the world.
Okay. Yeah.
That could definitely impact business.
For sure.
He talked about the potential for new tariffs on imported goods,
Okay. Yeah.
especially with, all the supply chain stuff going on.
Yeah.
Then he mentioned fluctuations in foreign exchange rates.
Okay. Yeah, that could make a big difference.
Yeah, and then changes in tax regulations.
Okay.
And all of these things could potentially affect their bottom line.
Right. Because different countries have different tax rates, and if those change.
It could really throw a wrench in the works.
Yeah.
And the last thing he talked about was consumer confidence
Okay.
and how all these global factors can really impact how much people are willing to spend
Right, if people are feeling uncertain about the future, they might not go out and buy new shoes.
Exactly. They might hold back on those discretionary purchases.
So this is a really important point because even if Nike has the best turnaround strategy in the world,
Yeah.
if the global economy is doing poorly,
It's going to be an uphill battle.
yeah, you can have a fantastic plan, but if the global economic winds are blowing against you,
I can get very far.
it's be tough going.
Absolutely.
So Nike has a strategy, but there's definitely uncertainty surrounding the economy and global politics.
Yeah.
But the article shifts a bit when it starts talking about Nike's valuation and their dividend.
Yeah. That's where things start to get interesting.
So talk about that.
Okay, so this is where the argument that Nike might actually be undervalued starts to come in.
Okay.
So the article talks about their price to earnings ratio, or PE ratio.
The PE.
Yeah, which basically tells you how much investors are paying for every dollar of the company's earnings.
Okay.
And right now, Nike's PE is 22.4. And the article points out that that's actually pretty low compared to Nike's historical average.
So it's cheaper than it normally is.
Exactly. And what's really interesting is that they compare Nike to these slower growth, but typically more stable dividend-paying stocks like Coca-Cola
Okay.
and Procter & Gamble.
So like the big blue chip stocks.
The classic blue chip stocks
Yeah.
that a lot of people invest in for safety and dividends.
Right.
And those stocks often trade at a higher PE than Nike is right now.
So that's really interesting because historically Nike has been seen as this growth company
Right.
that commands a premium valuation.
Absolutely.
So to see it trading at a discount to these more mature companies is kind of strange.
It's definitely noteworthy.
It definitely is. But the article does mention something really important here, right?
Oh, yeah. They throw in a big caveat.
A caveat. So what is it?
They basically say, look, if Nike's earnings continue to decline,
Okay.
then even this seemingly attractive PE could be misleading.
Okay.
Because if the E in PE shrinks,
Okay.
if the earnings go down,
Yeah.
the price you're paying relative to those earnings is actually higher.
Okay.
So the current valuation is based on the idea that Nike will eventually get back to earnings growth.
They have to start making more money. Okay, so it all depends on their ability to turn things around
Exactly.
and become more profitable.
That's the key.
But for a long-term investor, someone who's thinking 5 years, 10 years down the road,
Yeah.
this lower price could be a huge opportunity
A steal, potentially.
if they believe in Nike's long-term potential.
Yeah, if you think they're going to figure it out,
Right.
this could be the time to buy.
Exactly. So the article really frames it as, you know, if you can look past these short-term challenges
Yeah.
and you believe that Nike's brand is strong.
Which it is.
Yeah.
I mean, it's an iconic brand.
And you believe they can recover.
Then this could be a really good deal.
You might be able to buy this company at a discounted price based on what it could earn in the future.
Exactly, buying low.
And then on top of that, they pay a dividend,
Oh, yeah.
which is nice.
A little cherry on top.
A little something extra for investors while they wait for the stock to hopefully go up.
Yeah, because that dividend is paying you while you wait.
Exactly. And the yield is pretty good, right?
Yeah, it's around 2.4%.
Okay, not bad.
And on top of that, they've been increasing their dividend for 23 years in a row,
23 years.
which is a really good sign.
Wow, that's a long time.
It shows that they're committed to returning value to their shareholders.
Right. And it shows that they're financially stable.
Yeah, if you can increase your dividend for 23 years straight,
You're doing something right.
you're doing something right.
So let's put it all together.
Okay.
What's the overall vibe you get from the Motley Fool? Are they saying buy Nike or are they kind of like, we're not so sure?
I think they're being pretty balanced.
Okay.
They acknowledge that there's definitely some uncertainty among investors.
Yeah.
And I think that comes from Nike not always living up to expectations in the past.
Yeah, they've had some stumbles.
They've overpromised and underdelivered a few times.
Okay.
So the Motley Fool is basically saying don't expect the stock to take off right away.
Okay.
They're saying it's probably going to stay kind of flat until there's some evidence that things are turning around.
So what kind of evidence are we talking about?
We're talking about sales going up, profit margins getting healthier.
Okay.
Just concrete proof that their strategy is working.
Show me the money.
Exactly.
So it's cautious optimism.
Yeah, I think that's a good way to put it.
But there's definitely a wait and see approach.
For sure.
Okay.
It's not a slam dunk.
It's not a guarantee.
No.
It's not risk-free.
Investing never is.
That's true.
But the Motley Fool concludes by saying that despite all the challenges,
Yeah.
the fact that the stock has dropped so much
Yeah.
might actually make it a good buy for people who still believe in the Nike brand,
Who believe in that swoosh.
who believe in the swoosh.
Yeah.
Okay, so Let's recap everything we've talked about. We've
Yeah.
gone over the reasons why Nike stock has dropped so much,
Yeah.
that difficult transition with their direct-to-consumer strategy,
Right.
increased competition from all these new brands,
Yeah.
and some problems managing their inventory.
Too many shoes.
Too many shoes in the
And
warehouse.
recycling. And then we talked about their plans to fix it.
When now?
Win now, focusing on athletic wear, targeting those key markets and China.
Yeah.
But there's still some doubt from investors given the near-term outlook and all the uncertainty in the world.
Right. The global stuff is scary.
Yeah, it is a little bit.
But the valuation's looking pretty attractive,
It does.
especially compared to their history and some other big companies.
Yeah.
And they've got that nice dividend.
That's a sweetener.
It is.
So the Motley Fool has painted this picture of a company at a crossroads,
Crossroads, I like that.
facing challenges, but also with some real strengths.
They're not going away.
Right? Nike's not going anywhere.
No.
So the big question is Nike finally too cheap to ignore?
That's the million-dollar question.
Based on this Motley Fool analysis, I don't think there's an easy answer.
It's not a simple yes or no.
There are good arguments on both sides.
Absolutely.
So ultimately, the decision comes down to you as an investor,
Your individual situation.
your own personal situation.
Yeah.
What's your time horizon? How much risk are you comfortable with? And do you really believe that Nike can pull this off?
Right. Can they get through these challenges?
In this crazy world we live in,
It's a lot.
it is a lot.
It's a lot to consider.
So it's been a great discussion.
I really enjoyed this.
Me too. And it makes you think about Nike,
Yeah.
this massive global brand.
Iconic.
At what point does the discount on the stock outweigh all these problems?
Yeah. When does it become a no-brainer?
As a long-term investor, what would you look for?
Yeah.
What are the signs that their turnaround is actually working?
What are the key metrics?
Definitely something to think about.
A lot of food for thought.
A lot of food for thought. Thanks for joining me.
My pleasure. Thanks for
All
having
right.
me.
Cheers.
So